What is happening, everybody? This is the Flow Show. I'm Sean McLaughlin. He's Steve Strazza. We're late, but we're here. So what's happening? Strazza, how you doing, buddy?
I missed you on the morning show today. Tell me about your trip.
Well, I went to Santa Fe this weekend, and the plan was to drive home from Santa Fe. It's a 7-hour drive, and the plan was to drive home yesterday afternoon and get home at a reasonable hour last night.
Yeah.
That was the plan. Unfortunately, a coal train derailed on a bridge going over the major interstate between Santa Fe and Colorado and Denver, Colorado. And they completely shut the interstate down. It's still shut down. So that created all kinds of slowdowns and backups, and we didn't get home until the wee hours of the morning. So
Wait,
I don't think you wanted me on the show this morning. I was a little groggy.
hold on. Did you just say a coal train?
A coal train. I shared a link in our company Slack there if you want to read it in there.
So you heard it first here. That's going to reduce supply. Buy coal.
There you go. There is coal spilled all across the interstate right now. They're in the middle of cleaning it up right now.
You saw it? Like you had to drive by it?
No, we couldn't see it. We got rerouted off an exit long before we could see it. But we were stuck in traffic and for a long time.
That's got to be one big old dirty mess. I can't imagine what that would look like.
Yeah, unfortunately, there was a death involved. A truck driver got. I don't know how it happened. I don't know if the train fell on him or what. But there was a casualty, which sucks. But
on a brighter note, did you have a good time?
Had a great time. First time ever in Santa Fe. I didn't know what to expect, and it was. It's a very cool city. Very different. Very different vibe. Very different architecture. Great Mexican food. Yeah. We went to the Meow Wolf, which is amazing. I don't know if you know what that is.
No.
It's an art exhibit that's immersive. It's an immersive art exhibit.
Oh, I like that.
And it's amazing. Amazing. They have one in Denver also, but they're very different, but both great. Anyway,
there's one in Miami I've wanted to go to. Those things are cool.
Yeah. Anyway, if you want to know about Santa Fe, hit me up on Twitter @OptionsSean. I'm happy to talk with you about it. But hey, I see in a chat somebody just bought 100,000 contracts of coal due to our boots on the ground info.
There you go, Doug. Yeah. We could be fundamental analysts sometimes when we take road trips.
All right. So this is the Options Flow Show. And what we try to do here is we look into unusual options activity over the last week and see if that draws our attention to a actionable trade. And like I said last week, Strazza, I'm going to say it again this week. I've got a high hurdle that needs to be met for me to make a directional bet in this tape right now. Friday's broader market trading action kind of threw a wrinkle in my softening stance. I was starting to get bullish again. I know you were very bullish last week. Yes. I did not like Friday's action. And now today we're rallying hard again. See, the market just can't make up its mind, and that's why I can't make up my mind. So you got a high hurdle to convince me to put on a directional bet here. So what do you got?
So I know that. And what we also do on this show now more recently is I have to try to convince Sean of something bullish directionally, right? Because that's really what this list is for. It's bullish or bearish, not selling premium.
Right.
So I brought along a lot of charts. Let's just take it from the top.
Ooh, a lot of charts. Actually, all right.
We'll start with Frontline. Frontline, this is an oil tanker. $20 stock now. Yeah. Nice big old base. This stock pays like a 15% dividend, something crazy. I struggle to trade these stocks. So I wanted to bring it along because there are some levels we could trade against. I don't know how liquid the options market is, but if you zoom out on it for a stock like this is a 10-year plus base, right? It's just completing now. Do you really want to play something like this through options where you don't just have to get the direction right, but you also have to get the time right? Right? These monster structural patterns can take a lot of time to actually play out into a new leg higher. And if you're doing that through options, you have a limited time frame to get that move. Something like this just kind of, for me, is more common stock. I don't know. What are your thoughts?
Yeah, I agree. Common stock angle. I mean, you could potentially do this with leaps. We've got January 2025 options available, as well as January 2026 options. The thing with that is the bid-ask spreads are pretty wide on those.
Are they liquid? Oh, like what's the open interest in these things?
The open interest. So let me let's see. Let's pull it up here. Sorry, I'm looking on the wrong screen. The open interest is not a whole. The January 25's the open interest is not insignificant. And the bid-ask spreads are a little tighter. I mean, you'd have to be patient to work a fill here. And there's no reason not to be patient. You got plenty of time.
The action was in the January 19s, so same expiration, different strike.
Okay. Well, this is January 2025. You're probably
okay, going way out. Oh, right. We're leaping. Yeah. We're leaping. Got it.
The problem is like I said, I agree with you. Probably want to play this with stock, but if you're hell bent on trading it with options, which I get that. I would generally look at leaps in a situation like this because a leap will trade. It have some characteristics of a stock. The problem is, if you look at this chart here on my screen, we got implied volatility is relatively high right now because we do have earnings coming up in about 5 weeks. And so the ideal time, more so than any other contract, in my opinion, the ideal time to buy leaps is when volatility is down here, right at the bottom of the range for the past year. That's the best time to buy leaps because then you're really getting good bang for your buck on a big move. But look, I don't hate it. If you wanted to get involved with this, I would probably look at the January 2025. So that's a little bit more than a year to expiration from now, because you got a lot more open interest in these contracts. The bid-ask spreads are tighter. For example, this January 25 strike, you could probably put a bid in at like $1.70 and get hit.
Yeah,
relatively easy. You might need to be patient, but that's a trade I don't hate, and you got a lot of time for that to work out.
So that's a little bit different. For what the options market participants who were involved in this one last week did, I think they were looking for something more short term, right? They got in this on Monday, and if you look at the move from the stock just the past week, they've already made some good money. Maybe they're already out, right? Yeah. They bought these when they're out of the money Monday morning. Stock was below 19. It's moved a lot since then. It's overbought. I don't know. I don't think this is the best entry.
Sounds to me like somebody had some inside info, huh? You said they bought it before that breakout?
Yep. Monday morning. So I don't know. You want to move on from this?
Yeah, let's move on. You said you got a lot of charts. I'm going to see what else you got.
We were talking about healthcare this morning. A little bit of a debate between JC and I. In my opinion, healthcare is a very diverse sector. So you can't really just say, I want to buy healthcare stocks. Which ones, right? I don't want the biotechs right now. I don't want the medical devices. Pharma looks pretty good. And the providers are starting to look good. UNH came out, had a big earnings beat last week, and you kind of saw a sympathy bid in the entire space off of that news. Centene is a healthcare provider, CNC. You got a nice little base here. Very, very short term. Not the biggest trade opportunity. For example, I'm measuring out this base. I think the breakout level is right around 70, call it 71. Measure out the base, you get 10 points, 15% move. So I get it. You could buy a little base breakout here. I don't hate that, but it's not really a long-term trade.
My feeling is that whoever is getting long via calls in Centene right now, they're making two bets. They're making a base breakout bet, and they're making an earnings bet, which is next week.
Earnings, yeah. All right, so we would have to stay away from this one on the account of earnings. Another one I just want to mention here. This stock no longer has my blessing, Sean. Maybe I'm a bad technician. I don't know.
Is JC still itching to sell calls in this thing?
Listen, I'm with them. I think you got to wait, and it's definitely not that moment yet because this thing is still just melting higher like every day. But I can't touch this type of an uptrend. Where do you enter? How do you manage it? I don't know. It's just a nosebleed of an uptrend.
Yeah, I mean, you gotta be of the mind that it's going to go reach for that next Fibonacci extension above 900. You got to have a strong belief that that's going to happen if you want to get long here.
50-60%. And this is already like, I know I keep talking about this, but this is now a $600 billion stock, by far larger than anything else in healthcare.
This is a large cap stock, a mega cap stock that has doubled since March, more than doubled since March.
It's kind of crazy. I don't know. I don't know how to manage risk in a trade like this. I wouldn't know where to get in, where to get out. So for me, I can't touch it. I also think, God forbid, when the air comes out of this whole weight loss drug craze, this thing will be significantly repriced. And I don't want to be around, if and when that happens.
Yeah, I agree with you, man. There's nothing about, I mean, if anything, I would want to get long, but like you said, it's had such a run. It's a crazy run. Volatility is very high. I mean, gun to my head, if I were to put a trade on here, I'd probably sell a put spread and try to get as far away from current market action if I can. I don't know if I can get any juice at the 525 put strike. Let's look here. If I were to do, let's say we did December options and we sold I'm sorry, what was that price? 525. Or I guess we'd have to do the 520s. Well, you could get 440 for them. So if we sold let's say a 500, a 520, 500, you only get $1.50. So you're taking on $8.50 risk to earn $1.50. Now,
no,
I shouldn't say that. I mean, that's true. That's true of all credit spreads. You're always risking more than you could potentially make. Really, the question is 520 far enough away for you to feel comfortable? I mean, like I said, gun to my head, I'm looking at this chart, and I got a chart on my screen that has the 50-day moving average. I mean, at the very least, if it loses the 50-day moving average, that would be my signal to get out, and hopefully I could get out with a manageable loss at that point. But I don't love it. I mean, this would be a trade I'd be forcing this trade, and I don't like forcing trades.
And here's the problem too, right? Like, there's massive headline risk here because the stock is currently being priced as if there's never going to be another fat person in the world. Like the company just cured obesity forever and there will be no side effects. So just wait until that first short report comes out talking about the negative side effects and the people who got sick and this and that. Stock's going to have a hole blown through it and that trade will be totally busted. I don't like it.
So forgive my ignorance here, but is that really the narrative that's driving Eli Lilly right now? Is they're participating in this, what's that called? Ozempic?
Yeah, they have another one. Miracle drugs.
Did they create Ozempic, or is this they have?
No, Ozempic is Novo, but they have another one. I forget the name of it.
Gotcha.
It's the two of them leading this weight loss chart.
So you're saying they're selling snake oil out there, some miracle drug that is a little overhyped. Yeah.
I'm not a scientist. I don't want to invest in a company that makes a miracle drug because nobody's ever made a miracle drug.
Well, look, I'll take the other side of that just for a second. And I will say that there will always be a market for health shortcuts, right? For anyone who is too lazy to do the real work, to do the Perlman plan, for people who are too lazy for that, there will always be a market for I could just take a pill and be healthy or pretend to be healthy or think that I'm healthy. There will always be suckers for that market. So, I mean, yeah, it's a weird situation.
I'm thinking about getting on Ozempic and then just telling Phil that I'm on the Perlman program.
You're gonna get on Ozempic and then do that thing that one guy did. He did that McDonald's documentary where he ate McDonald's food every day for 6 months or whatever that was.
Supersize Me.
Supersize Me, right?
Great documentary, by the way.
It was
documentary. Good for him. It took one for the team.
He sure did. Good for him.
All right, I saved my favorite for last. I had a feeling you wouldn't be interested in these either. I didn't really help argue the bull case much. This one, here we go. Archer Daniels Midland, massive base. We start over on the left-hand side of the chart. Big old base here. From 2014 to, just after COVID, 2020, early 2021. We get the breakout, first fib hit, second fib hit. Now we got some ugly top. But. We are of the belief that we are in a new commodity super cycle. If that is true, and if the information that we're getting from the commodities market right now, energy, agriculture, sure, metals need to pick up the pace a little bit, right? There's still work to do until we have more conviction about that thesis. But if this is truly a new commodity super cycle, more likely than not, this is going to be a fail top. We're going to be looking back saying, wow, they dug in, held those pivot lows time and time and time again. What a nice entry $70 was. I don't know.
Yeah. Look, I'll file this trade under only for those who enjoy taking risk.
Yep.
And I don't hate this trade strategy because I do love that level of support. And I do like the commodity super cycle theory you guys are kicking around. This would be one of those names that would participate. I would play this one very close to the vest, meaning I would lean against that 70 level. I would probably buy some near strike calls here, maybe like a 75 strike call or an 80 strike call, and 70 would be my stop loss level for sure. And the nice thing with the call is that our risk is defined. I would size it in a way, like I always do, that if I lose 100% of my capital, it's totally within the realm of proper risk management for my account. We do have earnings coming up end of next week. Maybe that's the catalyst that gets it going. You basically, if you're going to put this trade on, you have to be comfortable knowing that earnings could totally ruin this trade and your calls are a zero. You have to accept that risk.
When are earnings? I wish we didn't have this.
They are the 24th, so end of next week.
That sucks. Yeah. All right. God, earnings is the worst, man.
It sucks, but it doesn't suck if you go into it with the right mindset. If you go into the mindset of this is I'm either a hero or a zero. You just don't take you don't put a big position size on you. Let's say you have an account that you're comfortable risking $1,000, right? So then you go out here and you go into like I don't know, let's say January. I don't have any specific reason to pick January, but it's 3 months out. You could buy the 80 calls for $1.50 right here. Looks like you buy them $1.50, and if earnings are a smash hit, this thing's ripping, and these 80 calls are going to pay nicely. If the earnings are a dud, it's very likely these are a zero or close to it. But if I'm willing to risk $1,000, I could buy 6 contracts, 7 contracts. Maybe I trim my position size a little down just to be a little bit more risk averse. But if you get this thing right, Straza, and this thing makes a run back up to the summertime highs, those 80 calls are going to pay real nice. You're going to get 4 or 5x your money at least.
Sean, talk a little bit about the difference between selling puts and buying calls, and why you might like one versus the other ahead of
Sure. So when I sell puts, when I sell a naked put, that's technically a bullish bet, but it's not a it's a more conservative bet. Now, some might argue it's not conservative because you're holding naked risk, but it's the kind of bet where in your mind, or for whatever reason, if your thesis is bullish, but you're not wildly bullish, right? You don't think this thing's going to scream from 75 up to $100 over the next 2 months, right? If you believed that was going to happen, you would do much better buying the calls, because you'll get 10, 20x your money buying calls on a move from 75 to 100. Whereas if I just sold the 70 strike put, the most I can make is the premium I collect today, which isn't a whole lot, right? Now, the nice thing about selling a put versus buying a call is if I bought a call, this thing has to move, and it has to move quickly for me to get paid. The put, if I just sold a put and I'm wrong on the timing of the breakout, but it still holds, it doesn't really collapse or anything, I'm just early, I could still make money. This stock could even go down a little bit and I could still make money because the puts will eventually decay away and be worthless, and I could cover them for zero or let them expire, and I keep the credit. So it's a bullish bet, but it's it's the kind of bet I put on when I'm really just betting that the level that we're at now is going to hold.
Right. Okay. So you just said it. The way that I always think about selling puts versus buying calls is when I'm buying calls, I'm betting on a breakout or some sort of directional movement, whether it's a mean reversion, failed breakdown, scoop and score, whatever. I need that stock price to move higher for me to get paid. That's the bet I'm making. When I'm selling puts, I'm basically the bottom's in. This level's not going to break. Maybe the stock doesn't go up from here, but it ain't going down. Right. So when I look at a chart like this, I'm like, I would love to sell puts in this. Then you bring earnings into the equation. Ahead of earnings, I'm almost never going to sell puts.
Right.
What if the bottom drops out and this thing absolutely plunges on earnings? You don't want to have sold puts. You wish you bought calls. So I'm looking at this chart now with you saying earnings next week. I'm saying the pattern, I want to sell puts in, right? Because it's not an uptrend. This is a top. I'm saying the top fails. Hopefully, I don't even have like a failed move or a whipsaw that can spark something higher. I'm just betting that these lows hold. With earnings coming up, can't do it. If you buy the calls, at least the bottom falls out of this thing based on a bad earnings report. I know how much I'm going to lose.
Right. Hey, in the chat, I see Doug asking a question about, is selling put a strategy to own the stock? I mean, that's a different thing.
No, not for me.
Yeah, there's a whole lot of people out there who, there's stocks that they want to own or they're comfortable owning, but they want to get paid or they want to buy them cheaper. So let's say ADM is one of those stocks that you want to own long term, but you're not in it right now. You could say, all right, well, I'll sell a 70 put strike and collect some premium, and if the thing sells off and I could buy it at 70, great. They'll their cost basis will be lower than the guy who just bought stock at 70. That's not something I do. I don't think it's anything Straza does, but there are a lot of people who do that. For people who are definitely dead set on wanting to own a stock, but they want to earn a little premium and they want to get it at a better price, selling puts is fine.
I know advisors who do this, and it's a very common practice, I think, in financial markets. But why am I completely uninterested? Because we're technicians, and by the nature of it, correct me if I'm wrong, but if you are taking ownership of a stock after selling puts in that stock, you're buying it as it's fallen, right? We're technicians. So like even in a pattern like this, I would want to see some evidence that it's done falling before getting involved. When you're selling puts and taking ownership of the stock from selling those puts, then you're by definition buying a stock that is falling in price.
So it might be fair to say that someone who is selling puts to buy stock is more of a fundamental investor. They want to buy it low because they have a belief in the fundamentals. They're clearly not buying them because the technicals are supporting being bullish if the stock is selling off and they're getting put stock to them, right?
Yep. No, 100%. So maybe just like in the chat, not our cup of tea.
Not our cup of tea. All right. Well, look, we've gone long, but we've dropped some education here. I feel like we had some good discussions. We don't have a really good trade here. I mean, if you want to get long ADM, you have my blessing if you do it with long calls and you do it with the understanding that earnings can completely obliterate your trade. But if you get it right, it could potentially be a big winner. These are not the types of trades I usually do. So just throwing that out there, but you have my blessing if you meet the criteria of being okay with losing 100% of your investment.
I think we just covered an important topic, though. This was good.
That's right. All right, Straza, great job as always. Thanks for tuning in, folks. This has been the Flow Show. We'll be back next week, hopefully on time.
Hey, Sean, hold on. How about them Bills? Scared you a little bit last night, didn't we?
I did not like 1 minute of that game. I did not like 1 minute. What a finish, though. Your boys, man, they almost pulled it out. I would have been proud of them if they pulled that out.
How about that fight? At least we beat you guys up.
Hey, you know what? On one hand, if they would have pulled that out at the end, I would have been very happy for Tyrod Taylor. You know, he used to be a Bill. He was the last quarterback of the Buffalo Bills before we got Josh Allen. Soft spot in my heart for the guy. I was pulling for him. I feel like he had a good game. You know, he just plays on a crappy team.
Well, he also bad move before halftime. Apparently, he optioned out of the passing play. You can't do that. I feel bad for him. I want him to be good. I need him to be good. He was kind of sitting on the bench at the end of the game, like so dejected. I felt bad for him.
Yeah, no, he's a good guy. soft spot in my heart for that guy. Bills fans love him. But man, I didn't like anything about that game last night. I'm happy about the result, the final result. The nice thing about NFL versus college football is that a win is a win in the NFL. It doesn't matter how you got there, as long as you win. If that was a college game and we were a top 5 team in college, we probably would have slipped in the rankings after that game.
Right. It's called an ugly win. I think it was on this show last week. I said to you, the Bills have this like uncanny ability to come out and just like not show up to games. That's a risk for you guys. Like, I don't know who that was. It didn't look like the Bills that I know.
Yeah, there's a bad pattern that's been developing when the Bills are playing on national television where the whole country's watching. They don't show up, and that's not good.
You know what that is? As a big football fan, former player, like that's coaching. At a certain point, you got to point your finger at the coach for that.
Yeah, stage fright.
All right.
All right. Sorry about the football discussion, folks. Straz and I are first catching up after the game.
All right. Bye, everybody.
Take care.